Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 7th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. So we'll look at the stocks today, and they pushed to new all-time records, ignoring pretty much everything. We'll give a trade example, Molson-Coors with a hilarious name of TAP. Junk debt is approaching records. This is a great news for stocks, so hopefully there'll be a confirmation of the stock market new highs soon by the junk debt. And bonds again are looking quite vulnerable. We'll look at the Treasuries and some of the investment grade corporate bonds as well. And we'll finish off with dollar. And it's not looking good at all, and I have a short position in gold, so this is not looking great at all for my position. As also I have two more newsletters. One is called Elite Newsletter, and this is a paid newsletter, and I also have a Speculator newsletter, also a paid newsletter, and I'm going to cover all of these stocks in separate newsletters and separate videos for the members. So if you haven't yet, sign up at MasterChartsTrading.com. So very briefly, you can see that on this chart there is green, blue, red, and yellow lines. So these lines are my proprietary MasterCharts Trading price action indicators. You can find out more about them by going to MasterCharts Trading, or you can go to TradingView.com and look for me there. This is the indicators. So you can use them for yourself. I use them pretty much exclusively. And let's get right to it. So S&P 500 is again at all-time record highs, and absolutely, I mean, right there, somewhere in the very late March, I'm like, okay, this is just, if you were trying to sell this stock market short, then this is what's called a short squeeze. So let's say you shorted the stock market. Let's say you shorted it right there, for example, with a stop right above the, your new record highs. And when the record highs are hit, what do you need to do? You need to cover your short, right? Or let's say you bought puts, then you have to sell your puts. So what happens when you sell puts or when you cover your short? You have to buy the underlying security on an open market and cover your short. And this is what's happening. People who shorted the stocks need to cover their shorts, because they, as a very famous expression goes, markets can remain unreasonable longer than we can remain solvent. And this is exactly it. Markets keep pushing higher, but you cannot maintain your short position indefinitely, and this is the reason why you get squeezed out. So I keep saying the same thing: do not short a uptrending security. And how do I know it's uptrending? So again, I use my indicators pretty much exclusively, and this is the way I determine if the stock is in an uptrend. And here's how it works. There is the stock that became an uptrend. So on April 29th, 2020, this S&P 500 broke out above the blue line, and now it became an uptrend. Now I will continue saying that this stock, in this case S&P 500, is in an uptrend until there's going to be a new close below the yellow line. So you can see that there is very, very large distance still to go to the yellow line, and the yellow line is way down at 3,000. We're at 4,200. So a lot of things can happen before this collapse. You can kind of see this stock market collapse back on the 9th of March. So here's the 9th of March. At this point, I would have said that we're unequivocally in a bear market. In fact, we were thinking about shorting it in 27th of March here, but I decided against it, just based on the sheer number of promised monetary interventions that followed quite soon, and I was absolutely correct. Before that, we exited our previous positions back on February 2020, and trust me, I don't know anything about any kind of insider trading, so I didn't know anything about declaration of pandemic that followed relatively soon. So this was purely based on the technical trading, and this is how I pretty much make all of my money. So right now we're sitting again in the position. I mean, if you bought back in April, and this is the only really time that I see that was a great opportunity to buy. I'm talking about longer term kind of holds. So let's say you have a retirement portfolio. You could buy it into your retirement portfolio, S&P 500, or just pretty much any stock fund. So the last opportunity was literally a year ago. And since then, we were just sitting in the position and trailing the stock higher. And where do we trail? We trail at the blue line. So currently the blue line is 36.80. So if we bought it back in April of 2020, then we bought it around 3,000. And now we're at 3,600, or rather our stop is at 3,600. But again, you could take profits if you're worried about losing profits. Overall, there is also another great saying, the best thing to do is to sit tight. So as from the old book, I forgot the name of it, but it was written by Jesse Livermore, the stock speculator stock speculator book, and in it there was a great quote saying the men that are, or the traders that are capable of being right at the same time sitting tight are quite rare. I'm right really often. I'm right well over 74%, 75% of the time, sometimes 80% of the time. However, to sit tight, meaning that, okay, I got my target, I cannot lose, I'm just gonna sit there and I'm going to sit on my hands and prevent myself from taking profits. You see, the longer you sit tight, the bigger your profits overall. So not easy, honestly. This is kind of like a psychology of trading. So I'm really like learning this myself and hammering it into myself, and also telling this to my subscribers. No, sit tight. If you have a good position, the longer you sit, and I'm going to show it in a few minutes on another trade that we did. Dow Jones, same thing, new all-time record highs. Short squeeze continues. Very, very, very strong stock market. I mean, it's a little bit frothy, but overall, I think we could maybe pull back a little bit, but overall, we could continue higher for a long time. I mean, nobody really knows how high we'll go, but we could. We're at 4,000 now. I don't see why not. We cannot go like Bitcoin did. Bitcoin went from 7,000 to 60,000. So I don't see why not. Why can't S&P 500 double or triple within the next few years? It could easily happen. Same goes for Dow Jones. We're at about 34,000 right now. We could be at 100,000 in about a year or two if this continues. Sure. Anything is possible. I mean, we got Dogecoin, which is not even really a currency. I don't even know what it is. But for some reason, it's going through the roof and people are making money off of it. And yes, you can trade it using my indicators. So you can try it and see what happens. Here's NASDAQ, close to records, not really that much different from S&P 500, a little bit different graph, but overall not really much different. You can see that we dipped towards the green line, which I consider weak support, and we kind of bottomed out there, and we're making new records again. So overall, correlations are high between the S&P and NASDAQ, and this makes sense. Okay, so here's a trade I wanted to share. This is Molson-Coors with a great name, great ticker name TAP. So this is what I wanted to show. I wanted to illustrate how you should sit tight and how you should sit on your hands and how you should really try to avoid, being stopped out prematurely. So this is what happened here. This is from actual alert from my speculator newsletter. So speculator newsletter. You can sign up for it, and in speculator newsletter we look for these types of patterns. So let me just show you first what type of patterns I look for, and then I will kind of go over the actual trade. So I'm gonna zoom out first. I'm zooming out. You can see I'm zooming out really far. And okay, so I zoomed out all the way to 2016, actually 2016. So this is December, where I'm hovering is December 2016, and back here the stock was still above the blue line, and in other words it was still in an uptrend. Something happened, and sometime around late December 2016 and all the way into May of 2017. The important date is right there, 3rd of May 2017, where I'm hovering right now. Why? Because this is the actual date of the true breakdown. So at this point I'm going to consider this particular security TAP, also Molson-Coors, to be in a downtrend. And when do we sell it short? We sell it short in a bounce towards the red line. So around this area we could have sold it short in June. We would be very correct. There's another opportunity to sell it short right there, January 2018. Excellent, correct, very correct. Another opportunity right there, August 1st, 2018, also correct. Another opportunity in November 2018, very strong selling, more opportunities to sell in January 2019. Another opportunity in April 2019, etc. So every time we see it the price comes up from below, touches the red line, and then closes below, and that's when we're short. So we would have been, in very good shape selling it short. Even here, back on 12th of February, there was really not a breakout above the blue line support resistance, and then it collapsed even lower. So again, great opportunities to sell short. Finally, sometime recently, there's the breakout. You see how obvious it is? It's on 12th of January 2021. And why did I pick this particular security to trade it? So again, the reason being is because it was extremely beaten down. So it went from $100 to $32. You see, it lost 70% of its value, right? I also liked the way it broke out. So I liked that the narrow and this, see how the distance between the green and the yellow lines, it's quite narrow here versus it was wider back here in July, for example. So this is what we did basically. We were looking for extremely oversold stock that just broke out. So this is our speculator newsletter and how we really trade in the speculator newsletter. So I bought myself. I decided, okay, I'm gonna buy it right here on 16th of March. They're quite expensive. They were $5 each, so you need to multiply by 100. So I bought 5250 calls. They were like slightly out the money calls, and they were $5 each. So for those who never traded options, this just means that I am expressing my bullish outlook for the stock. I think the stock will continue higher, so I want to buy calls. I want to own a security or something, some sort of a paper that says that I'm eligible for if the higher prices will continue. If the prices are higher, then my call option, my option will get more expensive. So I bought right here on 16th of March of this year. I bought the $50 calls at $5 each. So I paid $500 for each call. And then it almost immediately went in my favor. However, so if you trade options, you will know that there are two very important what's called Greeks. So Greek letters. In options, there is a delta, and there is also the theta. So delta is how much does the option move relative to how much the underlying stock moves. So let's say the stock moves, I don't know, 1%. How much does the option move? So option in this case had a, options move about 3 times normally. So if the stock moves percentage-wise, if the stock moves 1%, then option, very roughly speaking, moves 3%. But there is a second part of this equation. It's called the theta. So since options have expiration date, the closer the time gets to the options expiration, the less people will be willing to pay for the option. So this is called theta decay. In other words, the price will actually get smaller. So let's say I bought, I bought here on the 16th of March, I bought it for $5. And then only a few weeks later, even though the stock went up significantly higher, my profit was relatively small. So you can see that I got stopped out at $5.30. So not a big profit. The reason being is even though the movement was significant, the theta, the decay, got my option. So the option got cheaper because we had to wait, a few days here. And it's wild how significant this decay is. So at this point, I'm like, oh man, I have just very small profit, and it's already reached the target. The target was about like right there. I just don't want to, I don't want to risk the being, losing the money. I really hate when I have a position which is profitable. I let it, continue, let it open, leave it open, and then it goes against me and it becomes a losing position. So it's like really depressing. So I decided to just close the position, have a small profit in my account and move on with my life. However, this is where that sitting tight comes in. So yes, I was right. Yes, I got my profits, very small profit. But if I sat tight literally 3 more days or 4 more days, I would have been rewarded significantly, because this right there on the 15th of April, I'm like, oh man, it's gonna go. It looks really good, this candle. And it definitely went. The stock is up 27%. However, I checked how much the same calls that I bought back in March for $5, now they cost $11. So it more than doubled, you see. So this is 27% move for the stock itself, from 47 to about 59. But the option tripled, you see. So it's usually about 3 times, more than tripled actually. I'm sorry, the option, right. So because it used to be $5, it became $11. So the price itself doubled, but percentage-wise, see, it moved 27%. The stock moved 27%, but the option tripled in price. It went from 5 to 11, more than doubled. And percentage-wise, you can multiply by 3, so it's more than 100%. Profit. So let's say it was almost 33%. We multiply by 3, it's close to 100%. So this is the essence of being just really doing very little and sitting tight and waiting for the good profit opportunity. And it could still keep going easily. Could easily still keep going. All right, looking at junk bonds, so ideally we should see a new high, at least 52-week high, and yet we don't really see it yet. I keep worrying about the junk bonds. So this is correlation coefficient. Correlation coefficient just means does a stock move the same direction as another security? And in this case, this correlation coefficient is towards S&P 500. So with S&P 500, and so correlation, you can see it's usually positive for junk bonds. So what I really want to do is I want to see a new high for the junk bonds, and then we can kind of all relax and say, okay, there is no more divergence. There is both stocks and junk bonds are moving in the same direction, so this is good news. Right now, we're still waiting for the new records, so fingers crossed, hopefully they'll be made soon. Looking at the investment grade corporate spectrum, so here, looking at the indicators again, you can see how it was just in March. You can see the distance between the yellow and green lines were huge. You can see right now the distance is very tight, and also we are very close to the red line. So this looks bad to me, and I think we could easily make another low and continue lower, so another leg down for investment grade corporate bonds. It seems that the higher the grade right now, the worse they perform. Here's Treasury note yield. So this is a 10-year Treasury note yield, and this is basically what the mortgages are based on. So mortgages and the yields have increased, 50% since the February, January area. And this candle I wanted to show, it's classic hammer candlestick right there where I'm hovering, today's candle. So maybe it's a dodgy hammer candlestick, but overall what's really important is tail out of the bottom, the shadow of the bottom, and I would call it stiff support. And where is this support? This support is at the green line. So this is weak support in the sense of much stronger support is at the blue line, but at the green line it's still support, just not very strong. But judging from this candle today, it looks like it's gonna hold. And what I'm trying to say is, if it holds here, most likely we'll see a new high for the move for the yield. This, by extension, means that we're going to see a new low for the move for the bonds. So bonds broke down. For example, here's IEF, the 7 to 10 year Treasury bond fund. Broke down right there on 16th of February. Some people actually shorted it. And it seems that we're done bouncing. I think we're going to continue lower, most likely make a new low. Here's TLT Treasuries, 20+ year bond fund. Again, a couple of great opportunities to sell short right there on 6th of January, and a beautiful opportunity on 27th of January. So again, it seems that we're going to see another leg down. Dollar, here's dollar index. So I trade gold, I trade precious metals, and I'd like to know what's happening to the dollar. I thought this is going to be bouncing. I thought we're having a bottoming action. Obviously it's not. We're making a new low, and we're so close to the new lows that I am getting kind of ready to throw in my towel on the gold short. So I have a still gold short, and I have another gold miner that I'm shorting as well, and it doesn't look good at all. Looks like we're gonna make a new low. If that happens, I will most likely close all of my shorts, even if it means a loss. If a new low for the dollar is made, then gold will rally. And here's gold. I shorted gold. Okay, so I still have a short position in gold. I shorted right there on the 8th of March. Right now, what I'm seeing is this retest of the red line. So the red line to me means resistance, and it seems that the resistance was overcome today. So you can see a close above it. It's not looking great, I tell you that much, for my sell short. idea that I'm selling it short. It's possible that I'm wrong. I'm wrong about 15 to 25% of the times. That actually makes very little difference because I still make lots of money. You're still going to be wrong on some of your trades, and so that's why you have stops. That's why you have psychology of trading. So that's how we trade, basically. All right, let me see if there's anything else. Looks like I covered all of the topics I wanted to cover today. Head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. It will take you to the same place. Click on products. I'm updating this and see which one is better. So the best thing to do is to try out the indicators and newsletters. Because you get pretty much everything I just talked about. You get the indicators. Here's about me. There's my beautiful picture, my performance. So this is from 2017, and this is my demo account. You can see that for quite a while there was really not that much of growth. It still grew, it's just not as much. But last year was just blockbuster for me. Partially because here in 2020 I started trading more options. So with options you can see how much difference. Prior to this, maybe like before 2020, I was trading mostly stocks, and you can see that stocks do not produce nearly the same results as options. Here I pretty much started trading exclusively options. You can see huge gains, just awesome. So hopefully this will continue. So do sign up for trading indicators and newsletters. So Ultimate Bundle just adds a basic stock screener. So it screens largest 250 stocks for opportunities to buy. For example, buy above the blue line. Let me see. What was I? Tap, for example. So this is the type of stocks that we look for a breakout, and we buy them basically. And this is the type of stocks that are also available for the advanced stock screener. So this thing is more for the people who like to trade more often. It's a little bit more money, $39.95 per month, but I think it's well worth it because you get lots of different examples. Daily, you get tons of alerts. Like for example, for American stock exchange, you get 80 alerts per day. So a lot. You need to really filter what you're looking for. In my opinion, the best is this one right there, all stocks with options. So it's my favorite kind of list and kind of screener, and I get lots of daily alerts, and this is one of them, for example. So Molson-Coors came up in this scanner. All right, so go ahead, sign up. Again, you have 7 days free trial. Cancel anytime, and I hope to see you soon. Thanks for watching. Bye.